sell, move on, upgrade. That loan ends, a new one starts. On average, it's 7 years. A lot of my clients, the average is probably more like 5. Well, we're sick of this home now, we're going to move on to a new one, I'm going to sell and move up to another one. So on average, about 5 years, but the industry average is 7. So a lot of the things have worked out on 7 years. Which brings me on to upgraders, which is, say, non-first home buyers, but I've already owned a home before and I'm going to upgrade to a new home. A couple of things to watch out for, and Mary mentioned some of these, Tanya mentioned some of it as well. Is watching out for, if you've got a sell to buy, how do you approach that? Do I sell first? Will I try and sell and buy at the same time? What will I do? So there's a feature that a lot of loans have, which is what's called portability, and what that means is you can sell a house, buy a new house, move the loan from one property, put it on the next property. That's loan portability. You're going to port it from one property to another. Known in the industry as substitution of security. So you've got a security property, you're going to substitute it for another one. The trick with that is that if you're going to do portability or substitution of security, you've got to have the settlement date for your sale and the settlement date for your purchase on the same day. Not always easy to arrange, particularly if you haven't started with that in mind in the first place. So you've gone, oh great, I found this house, fantastic, I'll buy that. Now I've got to put mine on the market. It's got 2 weeks until you get a contract on it, and then 30 days to settle. You might have an overlap of 2 weeks, where you've either got 2 properties for 2 weeks, or you've got no property for 2 weeks. So if you're going to do a sale and move on, just bear in mind that your dates for settlement should be on the same day. And your solicitors and or us guys can work with you on how to word your contract so that you've got that simultaneous settlement on the same day, the sale and purchase. Otherwise, you're in the land of bridging loans. And bridging loans is basically where you own 2 properties, but you're not actually paying the debt on both loans. So is everyone with me with that? So say for example, you've got a house worth $500,000, you've got $300 debt. You're going to buy another house worth $500,000 and you're borrowing the whole $500,000 because your deposit's still trapped in the house that you own. So for a time, you've got a debt of $800,000 for a short period of time, but you only make payments on the original $300,000. So this $500,000 worth of debt, there's no repayments being made on that. Now what that means is, it doesn't mean that it's interest free, the interest is still being charged, the interest is adding to the loan. So if it takes you 3 months to sell your first home, you've got 3 months worth of interest on $500,000 getting added onto the loan. So when you finally do sell, you can settle on the first loan and bring it back down to where it should be. But you're covering that interest that you haven't paid for that 3 months. That's why people say bridging loans are dear. Well, bridging loans themselves aren't. It's the accruing interest is what makes them dear. So bridging loans aren't ideal. Can be done, they're not ideal. Best is simultaneous settlement, but you need to start with the end in mind if you're going to do simultaneous settlement. Getting towards the end, construction loans. If anyone's buying land and construction, there's a few little tricky bits, particularly for first home buyers with that. There's no first home buyers grant on land. The grant only comes on the house. So if you're buying an existing property, you get the 7,000 grant, gets paid at the dark settlement. If you're buying vacant land, there's no grant on the vacant land, so you can't count on the 7,000 to help you with your costs, because it doesn't happen until the house gets built. There is a concession on the stamp duty on the vacant land, and it's 150, Tanya? 150,000?
I can't be sure.
Can't remember.
But I know you've got to build within 2 years.
Yeah, you get normally when you buy vacant land there's stamp duty, same as when you buy any property, but there's a concession on the vacant land like there is for the first home buyer's grant for the purchase, but there's no grant. So the grant is paid when they've deemed that the building has commenced, and that's usually when the slab goes down. So the $7,000 grant doesn't get paid until the slab goes down. So land and construction deals, you've got to be able to cover all the costs and everything to buy the vacant land, and then you get the grant once the building's commenced. So a little bit tricky to watch out for. There's no extra stamp duty. You pay stamp duty on the vacant land, there's no stamp duty on the house, because it's not there. There's GST, on the materials. So they don't think you get away with it that easy. The government will always go, pay me money. But there's no stamp duty on the house because you've only paid when you make the land. So construction loan's a little bit specialised. The other one is what they call house and land packages, where you buy the land and you've got a contract to build a house at the same time. So when we put the loan to the bank, we put it as purchase land, build a house, all in one go. And the loan gets approved for the whole amount. The money to buy the land and the money to build the house, all in one approval, done, house and land package. What most people do though is they end up buying the land first, and then, so they've gone out to North Lakes or something, no, I found a block of vacant land. So they buy the vacant land, now they've got the land, then they go, now we better go and find a builder. And so then they go and do the build as a second piece. And what that ends up happening is that we take the land loan and we do an increase for construction. And bring the builder in. So house and land is one way, that's all one deal together, or land and then construction. It's a two-part deal. So if you're thinking about doing it that way, what we'll normally do is we'll do an approval for the land and then we'll do a pre-approval for the build at the same time. So that you've got some comfort that the bank's looked at the overall amount that you're going to borrow in the overall scheme of things, and they've said, yeah, we'll lend you $450,000, even though you're only buying the land today. But we've looked at your situation, we'll lend you the extra to build a house. So at least you've got some comfort before you go and sign a contract with a builder, knowing that the bank's going to give you the extra $300,000 to build a house. The only other bit was timings, and I just want to briefly run through a couple of quick things on the contract. On the floor. Contracts of sale, this is what they look like. This is a Real Estate Institute of Queensland contract. So it's one of the things that Tanya was talking about before. A couple of things to watch out for. Buyer's name here, buyer. Like Tanya said, make sure it's full names, correct spelling. The number of times I've seen contracts come through and it gets all the way to documentation and they go, oh, hang on, there's no middle name. Mucks up the whole thing. Has to go back and get reapproved again, redocumented again. Or because the agent wasn't paying attention and they've got to put middle names on it. So if you've got an unusual name, make sure it's full names, correct spelling. So just something to check. Buyer's solicitor, so that's your solicitor. Property details goes on the bottom. If there's a tenant in it, they've got to put the details in of the tenant. Finance amount and deposits amounts. How much are you buying? How much are you borrowing? For finance amount, I normally put in there sufficient to complete. In other words, none of your bloody business. I knew you need to know is I've got enough money to do the deal. Now, if the agents want to give us a call and say, you know, is Mr. and Mrs. Brown, are they good to go? With your permission, we'll tell them, yeah, they're good to go. To give them some comfort. But generally speaking, you don't have to put a specific amount in there. Building and pest inspections and timings. Be careful of the time frames. This is a stressful time when people buying houses, and the last thing you need to be is stressed on time. You're better off to have a little bit extra time built into your clauses rather than being tight on time and have to get extensions. The worst, most stressful time is that, you know, finance approval is due 5 o'clock on Friday afternoon. It's now 3 o'clock on Friday afternoon. The approval hasn't come through. Guess what? Everyone's freaking out. You're better off to have an extra, you know, till Wednesday the following week. So instead of a 14-day contract, get a 20-day contract. I did one for a client this morning. She signed a contract yesterday. She's got, so 16th, so we've lost 2 days. 16th is gone, 17th is gone. She had 21 days for finance, right? 14 days for finance, okay, we'll be okay with that. 21 days for settlement. So what that means is we've got effectively 8 days to get her loan approved. Because in that 14 days there's 2 weekends, so there's 4 days gone. We've also got the 25th of January, 26th of January in there as well, so that's 5 days gone out of the 14. So really we've only got 9 days to get her loan approved. We've already lost 2 days, 16th, lost today, Monday. So we're now down to 8 days to get her loan approved. And then after approval, the banks send their paperwork to their solicitors. Solicitors make the contracts, the mortgages, send it to the borrower. The borrower has to read through it, get it all signed and